Shweta, it's great to have you with us. Lay out the case for us. I think you called this one of the most controversial names in the space, especially as we see the industry at large move back towards an ad-supported model. Where does that leave Roku?
Yeah, well, thanks for having me. The reason why I said it's one of the most controversial names is because there's just so much debate that's going on with this name. On one side, we have supply chain issues where Roku has seen an outsized headwind versus the competition. We also have this macroeconomic inflationary pressure and wage inflation. And we also have, the international expansion and investments that Roku is making that makes investors a little bit more hesitant on what the next growth opportunity is for Roku. That said, we think that long term, it is hard to imagine that Roku will not emerge as one of the leading operating systems globally for TV. And our long pitch here is that, one, ARPU is very much underappreciated. If we look at the Street's ARPU, the Street is estimating ARPU growth of around low double digits. So call it 11, 12, 13% 3-year CAGR up to 2025. If you actually look at linear TV ARPU, that ranges from $100 to even $150 if you look at Comcast's ARPU. And so we think that Roku's ARPU can actually even exceed linear TV ARPU, and they're not even close to that, $50 probably by the end of this year, and they could triple that if you think about the drivers that could lead ARPU growth. Now, the pushback would be, well, what about active account growth? And that's the controversy.
Okay, well, Shweta, taking a look at the fundamentals, though, you mentioned those supply chain issues, and that has led to a loss in market share over the last few quarters. How do we know if there was real demand destruction there, and how do we know that customers didn't go to, say, an Amazon and are now locked into that ecosystem, which is much larger than Roku's?
Well, first of all, we did our proprietary survey. We surveyed about 2,000 consumers, which devices they use, which smart TVs they use. In the U.S., we think that, yes, Roku's share has ticked down from, call it, over 35% to now maybe 30% or somewhere in that range. But it is by far the leading operating system and the leading TV platform here for connected TVs in the United States and in Canada as well. So, yes, maybe there's some at the fringe market share loss to Android as well as Amazon, but they still remain pretty small percentage of the market. The second point is that satisfaction levels, according to our survey, are very high for Roku. They were actually the highest. What that tells us is that it's not only the account additions, but it's the net additions, which is the retention rates for Roku are likely to be a little bit higher than perhaps some of the competing platforms. And the final thing I'll say is that Roku, at the end of the day, is a TV-first operating system. They built their technology ground up for TVs. That's not the case with Android. That's not the case with Amazon. And when you think about OEMs, they're a little bit more hesitant, arguably, to partner with an Amazon because of the retail partnerships. And so really, it's either Google's Android, which has a small market share here in the U.S., or Roku, which still continues to be the leader.
Although, Shweta, sometimes, it's interesting to look at some of the strategic adjustments some of these players have made. Roku used to shun original content, then they got in with the Quibi library. Netflix used to say that password sharing was fun, maybe not so much anymore. Doesn't that suggest that maybe the low-hanging fruit has been picked?
Some of the low-hanging fruit, yes, I think so. I mean, the one that I would point to is the streaming sticks. I mean, it started with being able to stream TV. We all had non-smart TVs, and now we can't find a non-smart TV in the market. And so all of us just made our TV smart with a sticks or a dongle, and that is pretty much very well penetrated in the U.S., maybe not so globally. So yes, that low-hanging fruit is picked, and so there's this shift of going from sticks to the TVs. But the Roku, back to your point on the Roku channel and this shift across the different companies, I think that the Roku channel is not directly, the idea is not to compete directly with Netflix. I don't think Roku can afford to do that, and I don't think they're trying to do that. I think the idea there is that the Roku channel itself it monetizes better than anything else on the platform that they have control and inventory for. So Roku channel, they have full inventory control. They're trying to drive engagement, and they've done a great job. In about 5 years since when Roku channel was launched, it's now a top 5 app. And you think about the top apps that there could be, including Amazon Prime, YouTube, et cetera. There are 7 that I can think of, and Roku is in top 5 of them. So they've certainly done a good job driving engagement, which really is driving their monetization engine because they control that inventory.